What is going on YouTube? It's Brendan. I am back on camera. Guys, I have lived in 3 cities in 5 days. It's been absolutely crazy. Now I'm in Fort Myers, Florida. I know this city very well. Been vacationing in Southwest Florida for a long time since I was just a little baby. I'm in a 1940s style beach house, which is really cool. It's fully renovated. Lots of fun to be in this city. Haven't had a chance to enjoy it yet because I want to talk about the markets with you guys. Okay, very important we talk about the markets. What are they doing? Are we going on a parabolic bull run or are we about to collapse? That's what we need to decipher. So guys, please do check out our Telegram, the link in the video description. If you want to get some trade signals, that's all you get in the Telegram. If you're busy at work, check out that Telegram. We do have professional traders in our room. Our Discord link right below this video, the join button, full integration into YouTube. Our sponsored platforms in the video description, BITGET, SimpleFX. We trade on both of these, one for crypto, one for everything else. Bonuses, private tournaments, only available with our link. Let's get into business. So let's talk about what's happened the last couple of days other than me living a crazy, hectic life. So we have to understand market cycles, guys. I have oil up on the chart, okay, up on the screen. I want you guys to see this because you have to understand when you have market cycles, when you go from boom to bust cycles, which is what we're going into now. As you guys know, we've talked about this many other videos, trading in a 3 sigma bubble. You can watch some of these guys that have made billions of dollars. I did say B with it, billions of dollars. Jeremy Grantham, Ray Dalio. These guys know market cycles. I've studied market cycles for 20 years myself, and I can tell you there are hallmarks, telltale signs in these market cycles that you can look for to know what's going on in the market. Doesn't mean it's going to happen right away. The dot-com equities bust took over 2 years from peak to trough, okay? Great financial crisis did not bottom until March 2009. So these things can take time, but let's look at some of the cycle indicators for where we are. In commodities, oil is a leading indicator of where we are. I want to show you what oil did back in 2008, the great financial crisis, and what it's doing now. And then we're going to jump into Bitcoin and look at the equities markets, okay? So let's look at this real quick. If we look at oil, look at the timeline here. This is 2008, basically July 2008. So July 2008, oil goes on this parabolic run up. Let's just take it from this low down here, and you come up a huge amount, almost 200%, okay? A run up. And then what does it do with the crash, okay? Look at this. So oil is a cyclical indicator of where the market's going. And if you look at this, the market bottomed in March of 09. Oil basically bottomed in February of 09. Okay, so this is an 80% decline, almost 78% decline. But you get these parabolic run-ups in commodities. You've seen it in copper. You saw it in gold. We'll look at the gold chart too. And then what are they all doing now? They're dumping. Okay, they're dumping. They, in a lot of ways, are leading indicators for what's going on in the market because remember, we are trading in a recession. We have 2 negative quarters of GDP. We have a hot market for, as far as unemployment. Like we have full employment. As a matter of fact, the jobs numbers came out and they were expecting 258,000 new jobs. They got over 500,000 new jobs. 0.5% month over month wage growth, which as a person who's getting paid, that's a good thing, right? Over 5% year over year. However, this is very bad. This is a bad narrative for the bulls because that is a hot job market, a hot labor market, and wage inflation is sticky, meaning the Fed is not going to back off. You guys have to understand, and if you have time, you flip on CNBC, flip on Fox Business. A lot of these guys that are super bullish, they're all basing this on a potential Fed pivot. In other words, the Fed saying, we're going to not raise rates, we're going to cool off, inflation's peaked, it's going to come down. As you guys know, it doesn't matter if inflation's peaked. What matters is high inflation, and I don't think necessarily it's peaked. Inflation moves in waves. It did this all through the 70s. When they thought it was going down, 2 months later, it shot right back up. So Powell knows this. okay? As incompetent as the Fed is, they are aware of this. They're going to raise rates. They have their minions out there, Bullard, Meester, Daly or whatever her name is in San Francisco. They're all saying we're going to continue to raise rates. So the market doesn't know how to react. Cyclical indicators in the market are going to help you as you trade. Oil 2008, run up, parabolic run up with the housing market collapse, okay? Now look what oil's doing now. We've got to go all the way back here to the beginning. Look what oil did since the pandemic crash. Same exact setup, okay? So oil flew up. Obviously, everything crashed in the pandemic crash. Also in March, by the way. We talked about March and September being key GAN crash, boom and bust months, okay? I can't get the exact top for some reason, but I mean, this is like Bitcoin rise. Look at this. Over 1,000% rise up, okay? And oil is crashing down right now, okay? You had 1,000% rise up from the pandemic. You got up to $131 a barrel. Let's zoom in, and guys, we're going to tie this together with the other markets. Just, you know, I like to wrap everything for you. I don't just want to put Bitcoin on a chart for you guys. I want you guys to understand what's happening in these markets, okay? So if we zoom in on oil and look at the health and welfare of this asset, let's do this. Now, keep in mind, as the economy contracts, which is by design, guys, by design, what the Fed is doing is designed to contract the economy. They have to have demand destruction to bring inflation down. And you get demand destruction by layoffs, by hurting companies, by raising rates so they can't borrow money. 20% of the Russell can't even service their own debt as the rates go up. So like I said, you are at the beginning stages of the recession, and it will get worse before it gets better. Unemployment or employment is still full. Unemployment slightly ticking up. This is going to take time. It could take a couple of years. It could happen much faster with the catalyst. But oil, as you can see, hit this, look at this run up right here. Boom. Hit the 131, fell back down into chop, into Wyckoff, got volatility, never came back up to retest this range. And since then, continual decline. Fell through your 150, fell through your 233, and it bounced off the 300, which is right at the 1 fib, if you view this as a giant double top, okay? Right at the 1 fib, a fib weight projection at 86,417. I want to see what oil does here. I'm not interested in trading oil. Normally, if this economy was really heating up, meaning in a positive way, this would be an awesome inflection point. It still may be. You still may be able to get a big rise up, but losing your long-term moving averages, knowing that this is a cyclical indicator, a leading indicator of a recession coming, just like the yield curve inversion, which we continually have, the yield curve inversion. We have all these telltale signs in the marketplace, guys. So being at the beginning of a recession and being in the depths of it, which I think will happen next year, 2023, GAN has a 10-year market cycle, and it's extremely accurate. Is it accurate every 10 years? No, it's not. But what he has for 2022 is the year of volatility. And has it not been the year of volatility? 2023 and his 10-year market cycle is the market of the boar. He called the bear the boar. So it's a huge bear market next year. You even hear the Goldmans, the JP Morgans, they're saying the same thing right now. They're all saying, well, this could be a sign of a recession coming in the next 6 months to a year, next 9 months to 18 months. 2023 is looking bleak. The equity markets are rallying for no reason on volume divergent rallies. You have to be careful when you're looking at commodities and when you're looking at Bitcoin, guys, which, by the way, Bitcoin looks like it's going to be listed as a commodity, and so is Ethereum, which is good because the Commodity Trade Commission, is much better than being under the SEC. So that's a good thing. Let's look at gold real quick, okay? Gold did the same thing. See the rise for gold up to 1830. I sequenced the gold moves. Some of you guys have been asking about gold and silver. So I sequenced the gold moves, and people are asking, why do you sequence these things? Because I'm just looking at averages of moves. When you're in a primary downtrend, we know the economy is contracting. I like to look to see how the assets perform off bounces. Okay, so if you look at gold here, 9% almost down move, 6% up move. 10% down move, 5% up move, and then you have the next move up here at 6.78%. Where did my other move go? Hold on, guys. Let's get this other move. See what this down move was. It's down move, 10%. So you're basically averaging, what is this? That's about 9%, 10.5, 10.5 almost. So you're averaging about 9.5% down, and then you're getting about 6% up. So this move is a little bit long in the tooth, hence it's starting to retrace. Now, you do have a cup and handle type pattern that is forming right here. You guys see this? You have a cup and handle type pattern. If you can get some chop like this, get your handle going and break out, there's your 150 moving average. We'll see if gold does this. Gold and silver will have their rise when the dollar starts to fall. When the dollar starts to fall and inflation is still present and the Fed is forced to pivot, I don't think the Fed's pivoting this year unless the markets completely fall apart. You have to remember, guys, if you're the Fed, are you going to pivot with the S&P down only 13%? You're going to pivot. No, you're not. The Fed wants to raise rates as high as possible because when they do need to stimulate the economy, they will be able to cut rates. They don't have a lot of room to cut right now. So they're not happy that the markets are rallying, but the markets are rallying and making it easier for the Fed to increase the rate hikes because they're going to get that number up as high as they can until they see what? The markets come crashing down. That is when you will see a Fed pivot, not when the S&P is down 13%. When the S&P is down 40%, you may see a Fed pivot. So these times will come. But let's go ahead and jump over to silver, and then let's look at Bitcoin, okay? So I want to see if we hold this cup and handle pattern on gold, guys. I'm not interested in gold and silver yet. I think there's still more potentially to come down unless we can get this bullish pattern to break out. Looking at silver, same thing here, guys. We have a 22% down move, 10% up move, roughly half, right? 20% down move, 13% up move. So the average is about 11.5% up and about 20% down. Again, so this move right here is long in the tooth, hence it's starting to roll over, right? Just based on your average. So I want to see what silver does here because this could just be making a top. It made a double top here in the daily time frame. Still got a bullish trend here and your money flow, but this could be coming back down again. Again, the commodities, silver, gold will be excellent trades, and this is actually good for those of us that want to be able to buy into them if they do decline more before a big spike up. Let's jump over to Bitcoin. Bitcoin, guys, if we look at Bitcoin on the weekly, nothing's changed, still using the 200 as support. So let's jump over to the daily. Again, our sequencing moves. Bitcoin, the average move up is 33%, so this move is long in the tooth right now. And if we jump over to the daily chart, something I want to show you guys here on the daily. If you look at the daily, guys, I think where Bitcoin's going to be in the most trouble is once these long-term moving averages get below this 45. And that's, it's an ascending line, but roughly 28, 29K. If Bitcoin can't come up before this and break into this area before it meets these moving averages, because these are the long-term ones, 200, 233, roughly 33,355. If it can't do this, it's going to be trapped below this line, okay? Because again, primary downtrend, economic squeezing, global tightening, global recession. None of this all happens in a day. It is gradual, which is why you will see moves up and moves down. And we as traders want to capitalize on both those moves in both directions. Very important to do. Also very important to have a screen. There we go. And so let's look at this on the daily. Let's get rid of some of this stuff and click here. We have our VPVR. We have solid support underneath this, right? The point of control, point of confluence for volume. You have this heavier volume spike up here because you have this cluster of candles. You see this cluster? So you have this cluster of candles right here. So again, this volume here is going to be resistance, and that again is at that 29K, 30K level as these descend with the 45. This is just a lot of resistance for Bitcoin, okay? Anything that starts coming up in this area is a lot of resistance, so it'll be an opportune time, depending on what the other markets are doing, to potentially short it as well. Let's check our volatility. Let's check a couple of things and click through some charts. Let's go to, where'd you go? There you are. We are still, the tightest bottling we have been in the history of this bull run is occurring right now. Again, that move up, guys, I fully expect, if this is going to be a move down, I fully expect a bull trap move, a breakout to key resistance. You could see Bitcoin come up to like 27, 28K, do this, right? Because what happens here? What happens here is you get you get a lot of the YouTubers like, oh my God, this is it. We've been waiting for it, 100K, 200K. Guys, this is how the markets work, right? The markets are not at a bottom until everybody has zero hope. When you have zero hope and your best friend is like, F Bitcoin, I want nothing to do with crypto, I lost all my money, that is when you get a bounce in the markets. That's your bear market bottom. Right now, with the guys getting super excited with the big thumbnails and stuff about Bitcoin's going to explode, look at this, Bitcoin's coiling up, all these things, this is all part of the bear market. And Bitcoin will track to the larger market because the larger market is where all the money is. This is all a money game, guys. It's just like Monopoly, all right? So the big hedge funds, the big banks, the whales, they have all the hotels all around the Monopoly board, and you got like the two utilities, water and whatever the other one is, or you got the railroad. So you have very few spaces you can safely land as retail. Every time you roll the dice, if you're not smart about the moves that you make, you're going to land on a freaking hotel, and you're going to be paying up to the big banks. This is how they make money. They make money on moves like this. And if this move gets more parabolic and comes up to these 200, 233, I'm certainly, especially with the 45 right here, I'm certainly going to be on this channel with you guys saying, this looks like the good area to short. We're going to lay out the levels and everything, because I would love to see a move up to get everybody super bullish once again before that next big move down. Very important, especially when you want to trap retail. You want to get that short squeeze in there, knock everybody out that's shorting here thinking this is going to roll over, and give all the perma bulls something to be excited for, okay? Money flow, we are bouncing off the median line, which is good. We are under the EMA cloud resistance. So we're staying bullish in the money flow, which makes sense because the overall markets are also still staying bullish. If we look over to the 4-hour time frame, though, this has just been mayhem on the 4-hour time frame. So 4-hour time frame, guys, let me go ahead and let's just do something different. Here's your Ichi cloud. Let's lay out a speed fan, Fibonacci speed fan. Go swing low, swing high. And you can see Ichi, you're just bouncing up and down. The clouds seem to mean nothing, finding some support, but let's get rid of the Ichi here because the 4 hour is so chopped up. The clouds are so thin because of all the volatility. But you can see this on the speed fan. Look at this. So the speed fan lays out nice here. You came down to your 0.5 here for support. You came down to your 618 for support, 0.5 for support, and right now you're at your 382. So this is just another way to look at Fibonacci, okay, using a speed fan. And it just gives you, when you're trending up like this, it gives you the areas to look for breakdowns as well. But Bitcoin's still holding this range very well. It's not doing anything parabolic one way or the other. It's chop right here, okay? So it's chop, it's above Wyckoff, it's making a massive double top, as you guys know. Keep drawing this, but in case anybody hasn't seen the other videos, if this comes down here, down by that one fib, 21,000, below 21,000, you'd be breaking a double top and descending, okay? So we're gonna keep watching this as well, but right now you are in standby, you're in accumulation. And if we look at the other markets, I'll show you why. Because the S&P is also on a nice big pump up. When you look at the S&P, guys, let's go ahead and do the S&P. Get S&P. This is a nice almost 15% move, peak to trough, okay? Your 233, your 150, your 200 all above you. The 1618 is at 42,226 or 4,226. That's where your 161 is. You may have a move up there, but again, just like with Bitcoin, you have a cluster of candles off to the here that's going to be giving you volume resistance as well. You are in a massive low volume pump here. So this, again, no breakout volume, no parabolic rise with volume to push these trends. You just have, even from the right off the rip on this uptrend, you have a below average volume bar. This whole pump, with the which has been going on since June 20th, June 17th. This whole pump since June 17th has had 4 average days of volume. Okay, 4 average days of volume in this whole pump, and it's even worse. And when you look at some of these other indexes, but I mean, that's just this is why I firmly believe this is going to come down. Okay, so you have 4 average days of volume out of 38 bars right here, 35 bars. So you have 4 average days of volume. That's it. Low volume pump, 15% price rise, all your heavy moving averages, your 1618. This looks like it's making a top just like it did here. May come up more, get everybody more bullish before it rolls back down. Let's look at the Nasdaq. I mean, the Nasdaq's horrible. Look at the volume on the Nasdaq. Look how bad that volume is. Already hitting your 150, already getting pushed back down. Okay, you see this? At your 1618 at 13,250. I would expect it to hang out in this range. I do think because these are the indexes, because we know how the Nasdaq, I am the Nasdaq whisperer, we know how these indexes behave. They like to make double tops, especially when they hit resistance, okay, every single time. So I would expect this to come down, come up, come down, do something just like that, and then start leveling back down. This is what I'm looking for. Now, catalysts in the market can change things, but we'll see how this plays out. But you're at peak resistance right now on the Nasdaq. You are in a low volume pump, and we will be looking at this and possibly setting up some trades here on the Nasdaq as well. But I really like to trade the Russell because it's just garbage. The Nasdaq has the FANG stocks, okay? The Nasdaq has the big money tech stocks. Love them or hate them, that's where they are. Nothing is in the Russell. The Russell 2000 is small caps. Most of the US-based companies, and again, a large portion of them can't even service their own debt. A lot of zombie companies here in the Russell, a lot of meme stocks in the Russell. So the Russell's also hitting, it didn't quite get to its 1618 at 1925. It's hitting the 150 moving average. I want to see these roll over a little bit, show me that this uptrend is deceased. But your 200, 233, your 45, this little window is the opportunity for the Russell right here. If it does want to get more bullish, beyond that, I don't see it, okay? I see a double top coming in the future, just like the other indexes. Want to see this come down, come back up, come down, and make our double top, and look at the volume. And this is what we'll be doing, guys. We'll be setting up trades. Check out all our information in the video description. Hope you guys enjoyed this video. You have any market cycle questions, I can bore you to death with my answers. I love to talk about market cycles. I love to talk about bubble cycles. I spent a lot of time studying them. So if you have questions, shoot them over there in the YouTube comments, guys. I will talk to you guys tomorrow. Take care, everybody.